Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, plenty for us to get into, but first, let's recap what happened this week in the markets.
Yeah, starting on the cattle side this week, cash cattle were 50 cents higher for the week. If we look at those feeder cattle markets, they were anywhere from steady to $2 lower this week. We got strength on the futures side with the April live cattle futures contract up nearly $1.50 and the March feeder cattle futures contract up $2.30. Corn futures, the March corn futures were actually down almost 10 cents this week, I think helping us on the feeder cattle side. Choice box beef price was down $1.40 this week. If we look at the hog side of the equation, cash barrel and gilt prices were $3 higher this week. Also strength on the futures side with the April lean hog futures contract up $4.50. The pork cutout value also gained this week, up $4.20 on what was stronger bellies and also ham prices.
Scott, as we take a look at those stronger hog prices specifically, I want to start there. Are we anticipating, or is the market rather optimistic about the demand picture? And then I think about reported cases of African swine fever in China and in the Hong Kong region, and how does that all play out?
Yeah, so I do think we are seeing, maybe some signs of stronger demand, domestic demand news out there. I keep saying as we see COVID-19 recoveries hopefully continuing and more vaccine being distributed across the country, I think we can continue to see some opening of things like restaurants that should lead to stronger demand. And I think some of that's showing through as well. We're always going to be focused on our ability to export more pork in 2021 to China. And as much as they seem to have had ASF maybe in better control, it isn't over. And these reports of new cases certainly provides additional uncertainty and perhaps opportunity for us in terms of U.S. pork exports.
We've been focusing a lot on slaughter numbers weekly. As we take a look at this week's numbers, we're starting to slow down a little bit. This is the second week in a row we've backed off hog slaughter numbers, and weights are also starting to decline.
Yeah, that's right. You look at this week, USDA is estimating for the week ending February 13th, 611,000 cattle and 2.664 million head of hogs to be slaughtered. Both of those are down slightly from the previous week. Interesting to me, you look at the year-to-date numbers here for a second, we're down a little more than 4% on both cattle and hogs. That helps us when we think about price outlook. And as you alluded to, as weights continue to also work down, maybe the hidden gem here will be that supplies aren't quite as burdensome, especially as we get further in the year, than we might have thought early, especially if what we're seeing on the slaughter front continues as we move through 2021.
9 months ago, would you expect, knowing knowing the shutdowns and the slowdowns due to the outbreaks of COVID-19, would you expected us to be as caught up on the hog side of things as we are today?
No, and I think that actually points to just how resilient we've been. It certainly was a tough period of time, but it's amazing how quickly we've come out and just pushed really hard. I would remind us that that's just phenomenal, the kinds of runs that we've been able to make consistently. So it seems like changes that have occurred as we've tried to deal more and more with COVID-19 have certainly paid off. We're learning. I think that's the message here is we haven't had to think about a pandemic in decades, maybe I should say centuries. I'm not always sure how to best phrase that, but our ability to have learned quickly and adjusted, I think we're going to look back on this and just be amazed how dynamic we were in being able to adjust to the situation that 2020 turned out to be.
Let's talk trade data as we take a look at those numbers from this week. Definitely some momentum, I think, on the beef side heading into the new year.
Yeah, that's right. So I keep saying I think you can be excited about beef trade here in 2021. the December 2020 numbers for us. Total beef exports 286 million pounds, about 12% above where we were a year ago. Second highest export volume that we've recorded. So a good month there on the beef side. China's been important to that. Exports to China, 26.9 million pounds. Exports to Hong Kong, 22.6 million pounds. Both of those are pretty strong numbers for us. Let's just hope that does continue in 2021. And I think we could get, again, excited about where markets go. On the pork side, 573 million pounds of pork exported in December 2020. That is down 8% from the previous year, but I just remind you that December of 2019 was a big increase as China really got in the market. So that 573 represents a pretty strong export number for pork as well.
When we look, we talked about this a little bit last week about the potential for it to be a stronger year for cash receipts higher on the livestock side of things, and as well as the rest of ag and commodities as well. But how important is this demand picture, and not just China, which is kind of our constant, but for us to diversify and grow and hit some of those untapped and maybe underserved markets?
Yeah, so I think there is that opportunity, and maybe you point this out very well. We don't want to be stuck with just two or three countries that we're trading a lot of product with. That diversity provides us risk management indirectly in terms of we may have some countries who are slow to uptake while others fill their place. And the easy one here is think about soybeans and China. You get yourself to where one country being 2/3 of what you're exporting can create some issues when that market all of a sudden turns down or dries up for you. And so we want to build those markets more broadly. And I think we're seeing some of that, especially in the beef and pork markets.
Does it become even more important knowing we could potentially see higher crop prices and more pressure on profitability as inputs rise?
So the very short answer there is absolutely. It seems to me that we're going to deal with some higher feed costs here for a period of time. There's going to be a lot of volatility in those feed costs. So getting stronger demand, all right? So I'll even come back to domestic demand. This fact that maybe we're getting some pull here as we're beginning to open some restaurants in some parts of the country. That's opportunity to do risk management, by the way, as well. That pull might not stay with us forever. I keep saying, hey, GDP and disposable income, although look more positive in 2021, might mean consumers out of the gate when things reopen are excited and go out and take advantage of that opportunity. But when they dig in their pocket and they have a penny left, they might slow down that domestic demand pop that I think we're going to see. So let's make sure we do risk management along the way here on the output side of the equation.
That leads us very well into talking about input supply and demand. USDA released their latest supply and demand numbers this week. And it looks like that input price picture is going to go up a little bit this year.
Yeah, I tell you, 120 million bushels of ending stocks of soybeans. If that doesn't get your attention, nothing will. That's very close to pipeline levels when you think about where we could end the year if it's in fact 120 million bushels. I keep saying that gives us opportunities for higher prices and lower prices. I guess I should say a lot of volatility. I think we're going to be focused on planting intentions here before long in the United States. I think we're going to see intentions that give us a lot of corn and soybean acres. That might push those prices lower for a period of time, but it doesn't take much of a dry weather event then come June, July to get us back on the other side. So I don't want livestock producers to be caught when there's opportunities. Maybe we get some lower prices when intentions comes out, and they might want to take advantage of that along the way. But we've certainly tightened up both those corn and soybean ending stock numbers.
You have to think that it's going to make us even more subject to weather volatility this year as well when we look at those crop prices.
Yeah, absolutely. And then I just remind us, we put a bumper crop in the bin this fall, then maybe that volatility is a lot less than it once was. So for crop producers, weather matters a lot in this picture in terms of where things go. We do need, from a crop perspective, if they want higher crop prices, China to be strong in terms of trade, but weather's going to play a big role as well.
Any big surprises on the livestock side of things when we look at USDA's supply and demand numbers from this week?
I think the one that actually jumps out at us is the increase in beef production that USDA has in the February report relative to January. They increased about 350 million pounds in terms of beef production. That actually puts the 2021 level above the 2020 level. If we reach those numbers, that's the biggest change. And what was going to be a decline in per capita consumption is now just a tenth of a pound different from 2021 to 2020. So a little different story. We'll see whether that beef production number is where we end up at the end of the day, but that was the big change.
All right, retail meat prices also out this week. How are things looking from the consumer side of things?
Yeah, so you'll start on the beef side here, and we got a jump of 11 cents in terms of that January beef retail price relative to where we were in December. It put it at a level that we hadn't seen since August. So you and I had kind of been on this discussion that beef prices keep moving lower, hopefully helping move product at the retail level. Maybe that January number ought to convince us that demand's strong as well when we jumped up in price level like we did. On the pork side, we were really unchanged from December to January, $4.12 a pound on that pork retail price. That's still well above where we were a year ago at this time. You look at both beef and pork, it's a nice place we are in terms of both wholesale and retail prices relative to where we started 2020.
I'm going to throw a curveball at you, and I should have given you a heads up, so I apologize. As we're talking about this retail price, are we seeing consumer? How is the high end and the high quality beef? How is that faring in comparison to what we're seeing? We know that so much of that goes into the restaurant supply chain. Have they been able to shift, and how is that impacting the price for prime compared to choice?
Yeah, so I think it has been strong. So I'll start here. So we get a sirloin, boneless sirloin steak price from BLS in this retail price series that we have. For January, it came in at $9.15 a pound. That's 8.4% above where we started a year ago. It's up 17 cents relative to December. If we looked at ground beef in that same breath, all right, so it's up a penny from December to January and is 2% above where it was a year ago at this time. So I don't know if you want to necessarily equate high quality and low quality with those two cuts, but it certainly tells us that those steaks were or were moved up higher in price relative to what we saw on the ground beef side. If you look at the choice select spread, it's been widening a little bit, which tells me again that higher quality stuff has held in fairly well, which is maybe not what we would have anticipated quite as much, because much of that higher end beef product was destined for the high end restaurants. However, I'll say I think a lot of those high end restaurants, if they were closed, even they found ways to use carryout and such that they wouldn't have early on in COVID-19.
All right, as we wrap up today, last thing for us to touch on is consumer sentiment, which gets to tie all of this conversation up into a pretty little bow. Talk to me a little bit about what we saw for February.
I guess you saved the worst for last today in terms of a little bit of negative news to finish up with, but and I should be careful. It's not that negative. If you look at the overall consumer sentiment index, it was down 3.5% in February relative to January. That's due in large part to what's this expectations component of the index, which was down 5.7%. Again, I think some worries about what future stimulus might look like has led to that maybe less optimistic outlook of expectations. But we'll wait and see uh, where we end up. And again, I just remind us we're still 25% below where we were a year ago at this time in terms of consumer sentiment.
That's incredible. Scott, I think that'll wrap us up for this week. A pretty quiet week next week. What are we looking ahead to?
That's right. So just one report, but I'll say a biggie: cattle on feed. It'll be interesting to see what happens on the placement front and cattle on feed inventory. We certainly, out of the last report, saw more cattle than we anticipated. I'll be curious to see if that trend continues.
Scott, great to see you again this week, and we will talk to you next Friday.
That sounds great.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. And while you're there, you can submit questions or comments, or you can check out all of the great Brownfield podcast, interviews, and all of the great content on Brownfield TV. Have a great weekend. I'm Megan Grebner for Brownfield.